our leaders are not going to proactively look to address and actually fix the problems. They're pushing the can as far down the road as they have to until people break. Like Gen Z is like literally throwing revolutions all over the world. And I don't want to see America break. I don't want to see young people get violent, but I think that that's kind of where it ends up.
The social contract is people believing that the next generation, it'll be easier for them, right? But that seems to have hit a wall. The real poverty line in America is $140,000. That if you're making below that as a family of 2 parents, 2 kids, you're essentially under the poverty line.
Basically, in the blink of an eye, I went from being able to afford to buy a house in a suburb of LA to like, wait, I have to make $300,000? You just tripled the amount of income that I have to make to qualify on the same house?
The term of the year has been K-shaped economy. You either have assets or you don't. Is this functionable? Can this last? Hello, everyone, and welcome back to the Bitcoin News channel. I'm your host, Rob Wallace, and today I'm very grateful to be joined by Robert, aka Infra, the mind behind Infranomics, one of the fastest growing econ channels on YouTube. And to be honest, the econ professor I wish I had in college. Robert, how are you doing today?
Good. That's a great compliment. That's all I hope to be. Just, educational.
Yeah, man. And I grew up, went to public school, and then in college studied economics, and it's all either lies or sugar-coated, right? And so if the economy were actually working in the way that we were told, people shouldn't feel poorer every year, right? So to start off, is the system broken, or is it doing exactly what it's designed to do?
Yeah, this is actually an interesting question. I still don't really know where I come down on it. Came up the other day in a space where, I get a comment quite often. I have a very diverse political background. Like my followers have very diverse political opinions. And so a lot of them, like I get this like late stage capitalism comment all the time. And like initially I kind of discounted it because I looked around and, we don't have truly free markets. Like the most important price of all, the price of money, the price of $1 is not controlled by the free market. It's controlled by 12 unelected, people. So like, or in the bailouts with 2008 balance sheet expansion, you can go down the list of all the examples how we don't actually have free markets. But then there's other times where in the space yesterday, Deer Point Macro was basically saying like, this is kind of like the natural conclusion of a capitalistic high value sort of society. And I don't really know where I fall down, probably somewhere in between like most things. But yeah, it's really unfortunate. I think it's more a story of incentives. And we've created a system of incentives where, wealth concentrates, power concentrates. We've seen consolidation, obviously, across basically every industry. And of course, wealth inequality is now worse today than the Gilded Age. And wealth inequality back then was so bad, we named an entire era of our history after it. And it's even worse today. Looking at like the Gini coefficient and stuff. So yeah, I don't really know if it's like, end stage capitalism and it's just kind of, this is the natural conclusion to our quasi free market system. I would argue that it's more like a series of, we've gotten to the point that we've gotten to due to, as Mike Green just put out in a paper a couple days ago, people making possibly good faith efforts for certain policy propositions. I mean, globalization being kind of the one I focus on the most. I think that, a lot of folks just didn't ever think, like you mentioned, a lot of folks are just not educated on what the macroeconomic consequence of XYZ policy might be. And so I think that, and that's not true just for young people, that's true for boomers and for Gen X and, no one really, at least in my lifetime that I've ever met, had a generation where they were all well educated on the finer intricacies of macroeconomics. Pretty much, so yeah, you get a lot of, I think, unintentional policy propositions that both parties have advocated for, right? It's not like, in my opinion, a political thing. It's not one party's fault or the other. They both have fault in certain ways. And yeah, like an accumulation of those over time, cumulative effect, you get to where we are now.
The golden rule or the social contract that seems to keep the whole entire thing going is that people believing that the next generation, it'll be easier for them, right? That you can, even if it's hard for you, you can raise children in a situation and they'll be better off because of economic improvements. Your work will mean something and there'll be greater productivity and life will be better in the future. But that seems to have hit a wall, especially within the last 10 years or so. You talk about this all the time. The youth, our generation, how would you sum it up to those in other generations, say a boomer, to explain what it's like on the ground as somebody in their 20s or 30s right now in 2025?
It's pretty bad. I mean, you could look at like youth unemployment rate, which has been headed pretty sharply higher. I don't even think that captures the true scale of the problem with things like gig work. I know a number of people that are, younger that have 2-3 of these kind of part-time gig jobs. Every major metro, like you can't afford, if you're a young person working kind of entry-level job, you can't afford an apartment. So yeah, let alone a house, right? Of course, like housing is a whole other thing. I have relatively decent skill set and experience and this sort of thing. Like, even I can't afford a house here anywhere remotely close to LA. And so, yeah, it's pretty disheartening. I think a lot of young people feel pretty disaffected, pretty disillusioned with the system and that social contract. The way that they usually describe it is, the older generations like pulled up the ladder. The way I describe it is the social contract was defaulted on by the older generations. And we're still stuck with our side of it, right? The promise side, the upside to it is gone. We don't get that. But we're still stuck paying Medicare, Medicaid, and Social Security and these kind of benefit programs that we're not going to see a dime of. So yeah, I mean, I think young people are increasingly nihilistic, and I get this. I talk to a lot of these sort of young people every day, and the level of like financial nihilism is kind of off the charts. Like, whether it be 0-day options, whether it be prediction markets, whether it be meme coins and crypto land, like everyone is just trying to like gamble their way to success because that's the only way that you can make up. I mean, I had a really good day job, was making like $100K a year. I was finally at a point in my life. I'd worked really hard. I'd done all the things that Boomer has said. Work really hard. You never call out. You always say yes to overtime. You always show up with the smile. I did that. And I worked my way up after working 16, 17 years in a particular industry, worked my way at the top, got that high level position and, was kind of turning 30 thinking, okay, it's time to buy a house and stuff. And then bam, like basically in the blink of an eye, I went from being able to afford it wasn't going to be like I was living large, right? But like I could afford to buy a house in a suburb of LA and, relatively modest sort of thing. I went from that to like, wait, I have to make $300,000. You just tripled the amount of income that I have to make to qualify on the same house. The house didn't change, but yet the income that I need to produce is triple what it was. That's kind of the step change that, people like me are trying to make up for, right? Like if our incomes didn't triple, and I don't know a single person whose income tripled, a young person especially, whose income tripled, then you just ripped it. And I think there's different experiences. Like I think the Zoomers have a different. We're all in the same boat, but I think that like Zoomers had a slightly different experience where like when I grew up kind of pre-internet, where you played in the street, you rode your bike until the lights came on, right? Like analog world. Zoomers never really had that. They grew up like on social media with the internet. They also never really, like when I was entering the workforce, I could look to kind of the Gen X folks at the various jobs, and like they had worked really hard. They had made their way at the top to the director, 100K salary, whatever. They had a house, they had a family, nice car, vacations, comfortable middle class life. So as a kind of younger millennial, like I could look to that, and realize, oh, it's in reach, and so like I kind of, didn't have much of a problem with working really hard, never calling out, saying yes to overtime, whatever. I didn't really have a problem with that because I'd seen these Gen Xers ahead of me that had done that and had gotten a pretty decent life that I wanted. So I didn't have a problem with that. But then Zoomers, like, they look to us, they look to the younger millennials, and they see us struggling. And it's like, what hope do they have? They don't have not a role model, but they don't have they don't have that. We knew
tangible
success.
Example.
Yeah, like we had it in our hand, or almost in our hand, and then it was ripped away. They kind of like never even saw it, So I think that we're all in the same boat, but I think that like I'm especially concerned, I guess, with like the Zoomers, because they are quite unhappy. Like I think that the mainstream media, like the boomer tradfi media, fails to grasp just how angry like the average Zoomer man is today.
100%. And you said there was a line, right, where your 100K salary could afford you a good life, and then something happened, right? And that was COVID, right? It had to be the money printing that happened over 2020 to 2022.
Yeah,
and that changed
absolutely.
everything.
Yeah, I mean, I went from, I almost had it where, okay, I could buy the little 2-bedroom starter home and not so great area, but okay, it's fine. It's not like the hood. And I went from being able to afford that with 100K-ish, whatever, per year to what? I have to make $300,000 a year just to qualify, like minimum, just to qualify to on a mortgage for the same house. That's kind of a huge step change. And like, it would take a significant amount of deflation to get there. Like we went from the average annual interest expense on the average home. It was basically in a range of like $8,000 to $10,000 per year for decades, for like 2, 3, 4 decades. During that period of time. And of course, not only did they print a bunch of money and assets went higher, but then interest rates also went higher. So the average annual interest went from 8, 9, 10,000 to 28, 29, 30,000. So that's another, part of it.
And so the term of the year has been K-shaped economy. You either have assets or you don't. And is this functionable? Can this last? Is this a system that is teetering, or can it go on for a long time with the haves and have-nots like this?
I think it actually gets worse. I don't want it to get worse. I would hope for policies that make it better and that, at least attempt to fix the issue and end up with a more equitable setup, especially for young people. I would hope for that, but like, I don't think it's going to get better. I think it's going to get worse. And I think it can go on. I think the pain trade for society, like a lot of, equity traders or FX traders or whatever, we'll talk about the pain trade. I think the pain trade for society is more of the same. Worsening of the K, worsening of the wealth divide. I think that's probably the pain trade for society. Another decade of worsening wealth inequality, another decade of 5, 6, 7, 8% actual inflation. Meanwhile, you're getting 2.5% wage gains. I think that's like the pain trade. And then you add in AI and productivity enhancements that'll lead to job losses. And yeah, I think the unfortunate thing is that like people aren't, our leaders are not going to proactively look to address and actually fix the problems. So what that means is that they're basically like pushing the can as far down the road as they have to until people break. And I don't want to see America break. I don't want to see young people get violent. And, Nepal, or there was another one, I think it was Morocco, maybe. This is happening all over the world. Like Gen Z is like literally throwing revolutions all over the world. I don't want to see that sort of thing here in America. Like, I really don't. But I think that that's kind of where it ends up. I don't think that either party, they might have good intentions. Like, I do believe that, kind of that Mamdani class of that party, I think that like he legitimately believes what he says. Now, economically, it'd be a disaster in my opinion, but I think that he at least like does actually care about affordability, actually care about some of these issues. That's just me. I know people think he's disingenuous, but like I tend to think that there are some people that genuinely care. The problem is that all the people that seem to care have like the exact wrong policy propositions. And so like I don't see anyone coming who number one accurately identifies the problem. And this is another thing that Mike Green was talking about in this recent paper is like we got to like get to a point where we can have conversations on both sides of the aisle about what worked and what didn't work and be honest and be truthful. And I don't see that level of acceptance, that a level of willingness and proactiveness. Like I don't see it really from either side. And the one side that is kind of showing more of it has the exact wrong policy propositions, in my opinion. So yeah, I think it gets worse until eventually, like it's always the young people that revolt. I think eventually it gets to a point where the young people break and get violent. And it's America, we got the Second Amendment. So yeah, unfortunately.
And you bring up the Mike Green piece in which he said that the real poverty line in America is $140,000. That if you're making below that as a family of two parents, two kids, if you were making less than 140K, you're essentially under the poverty line. You've done a lot of research in terms of wages and what it actually takes to survive in America. Do you agree with that $140,000 line? And have you talked to Mike Green? Because it seems like you two would really have quite the time going back and forth together.
Yeah, I originally came up with the kind of like silent depression framework. That's what I called it. I don't know, 2.5 years ago, maybe, and started looking at in maybe a different way than Mike Green went about it, more in a chart, using charts to graphically represent some of these things. Mike Green, I think, approaches it with more kind of quantitative, using numbers, right? A sample budget, for example, in that piece. I really like finding patterns, correlations, and when those correlations break down and those sorts of things. So I came about it kind of more from that angle. And yeah, I found myself that it would keep coming back to like 25 to 35 years ago, something changed in a number, like I kept that point in time, that era or that period of time kept coming up where, for example, personal income used to grow faster than the money supply. Then in 2000, that stopped and it went the wrong direction, where M2 money supply started growing faster than personal income. And personal income is a very broad way of measuring individual income. Very, very broad, very generous way. It's capturing more the upper leg of the cake than the lower leg. You look at like average hourly wage relative to the M2 money supply, it's brutal. I mean, it's been down into the right for decades. Labor force participation rate, that peaked in 2000 as well. Money velocity peaked in 2000 as well. And so I kind of framed all this around what I called the silent depression, which is we have, a subset of America, mainly the youth, have been, given an economy. Look, you're not going to get a boomer to agree with this because they own at least one house. They got, generally pretty sizable. The average boomer is going to have a pretty sizable equity portfolio. They also worked pretty hard and got up within industry to a pretty decent, well-paying job, right? They're kind of naturally more wealthy. But yeah, for young people, like, the relative share, I always phrase it this way, like what good is an average hourly wage growth of 2% per year if the money supply is growing at 10%? What good is 2% annual wage gains if homes are going up by 8%? Or whatever. This is, I think the easiest way to think about it, and why a lot of these relative charts show the same thing, which is an economy and a financial system that prioritizes wealth, prioritizes capital, and prioritizes assets over labor, capital over labor, that distinction that's always talked about. It's funny because in one of those early silent depression posts that I did, that it really kind of all started on X. In one of the first ones, I think it was like part 3 or part 4, I tagged Mike Green, and he didn't reply to that one. But then I did. It might have been part 5 or part 6, year and a half ago or something, and he did reply to that one, even though he wasn't tagged in it. And we had a conversation about labor share of income. And, basically, if you look at all the wages within America and look at that as a relative to GDP, that's kind of labor share of income. And I was calculating it using per capita wage, which he was saying that's technically not the right way to do it because, the labor share of income is a specific term with a specific definition. And I was saying, yeah, but if both parties voted to increase the labor supply by 30, 40, 50 million people and drove down the average person's wage, they don't care what total wages and salaries are. They care what their wage and salary is. And their wage and salary has been reduced by this illegal and legal immigration policies that both parties have pushed for. So we had a little back and forth there, but outside of that, not really. Everything that he's put out from that initial post with the new poverty line, everything, and I read it 4 or 5 times. I read the part 2 4 or 5 times. He put out part 3 recently. I read that 4 or 5 times. It's all like entirely consistent with stuff that I've been saying for 2 years. So, I'm glad that, TradFi, more accepted, reputable, if you want to call it that. I'm glad that folks like him are coming out and echoing things that I was saying 2 years ago, like that. Number one, that I feel vindicated. I feel validated and vindicated. And number 2, that's what it's going to take, to get towards a solution. If we're going to get towards a solution, it's going to take someone like him starting the conversation. I kind of naively thought that I could start the conversation, with 10,000 X followers or whatever. And I, kind of did, I guess, in some ways, but not to the degree that Mike Green can. He's been on, he went on CNN, Wall Street Journal's referencing some of those papers. And I'm just, I'm a little like disheartened, because it's like all basically carbon copy of stuff I've been saying for much longer. But, I'm glad that like at least it's being put out there in kind of more mainstream circles.
You're growing like crazy. Don't you worry. You'll have your Mike Green poverty line moment one of these days. No problem. I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code BitcoinNews and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video. But you harken back to, you say there was something that broke 20 to 25 years ago. You bring up, of course, immigration, but also it was the time that globalization got supercharged with China joining the World Trade Organization. Is it the combination of those two things, one more than the other? What broke around 2000 that has changed our economy forever?
2000 was definitely the China shock and China being admitted into the World Trade Organization. That happened in 2001, December 2001, I think. That's really what broke then. But I would, there was no clear one point in time where everything just broke that year or even that day, that month or something like that. There's no clear, one point in time where everything kind of went south. Like back in the 1980s, in the early 1980s was when we started to run large trade deficits. That just so happens to be the bottom in debt to GDP for the US government. Like the bottom was when we started to run that large trade. At the time, I think it was like $150-200 billion trade deficit, current account deficit. That was a lot at the time. Like things started back then, you could argue, and the 80s was also, there were some immigration policies that were passed back then. So you could argue it started then, but some period of time between what I would say 1982 and the China shock in 2000, that was kind of like certain metrics were still improving, right? Like personal income as a share of M2 money supply was still growing into early 2000s. Some things were not, like capital started to get kind of prioritized over labor in kind of the mid to late 80s. That's when you saw corporate profits really start to take off as a share of GDP. And labor share of income, the way I calculate it, is not nearly as rosy, I guess, as the way Mike Green's piece made it out to be. Even if you use total wages and salaries as supplied by the BLS, that's been pretty much down and to the right since the 60s, 70s. So yeah, there was no one point in time. I think globalization really, though, like they both were impactful in their own way. Globalization, what that really did, and this ties into the dollar issue too, the dollar's reserve status and Triffin's dilemma, Dutch disease. That and globalization, I would kind of say, is one thing. And I would argue that that's probably the bigger issue. Immigration policy, by artificially stimulating and growing the labor supply, both through illegal and legal means, you dilute the price of labor. The law of supply and demand is no different with labor. It's just that the clearing price, instead of a price, it's a wage. We call it a wage, but it's the same concept. And, we increased the labor supply faster than we increased demand for labor, and therefore wages were suppressed. Then you add into it, that kind of started in the 80s. Then you add into it globalization, which really kind of basically opened up the US labor market to the entire world. And that really suppressed wages. But what it also did was it led to this ever larger trade deficit and this ever larger current account deficit, which a lot of people talk about the trade deficit. A lot of people talk about the current account deficit. What very few people talk about is the inverse of that, or the way the current account deficit is financed, which is if we run it right now over the trailing 4 quarters, we're running about a $1.3 trillion current account deficit. And this is mainly the trade deficit, but there are other minor components like primary, secondary income. That $1.3 trillion current account deficit has to get balanced somehow, right? What that means is that we are sending $1.3 trillion more of wealth overseas than we are bringing in from selling to the rest of the world, and from unilateral transfers and that sort of thing. Very minor component that is, but that's what that means. And so we have to finance that somehow. Then you add into it, we also run a fiscal deficit, huge fiscal deficit. We have to finance that. Well, the way we finance that $1.3 trillion current account deficit is by selling financial assets to the rest of the world. So they send us goods, we send them dollars. They then reinvest those dollars in US stocks, US real estate, US corporate bonds, US treasuries. And that's how that gets bounced. So what that means is that $1.3 trillion per year mechanically must flow into financial assets each and every year from foreigners. So there's a guaranteed bid under US stocks, real estate, US treasuries, and who holds all the assets? It's the top 1%. This is why if you invert the current account, which is basically the capital account, if you look at that and plot it relative to the net worth of the top 1% as a share of GDP, or the S&P 500, all these different metrics show the same thing, which is like very, very strong correlation. The affordability chart of housing, right? You take the average home price divided by the median family income. That's almost a perfect fit with the inverted current account. And it makes intuitive sense. Like, for example, with real estate, foreigners have, in the past 15 years, purchased about 700,000 single-family homes worth of foreign direct investment in real estate, plus our REITs and mortgage-backed security inflows. That gets recorded under a separate, line item. It's under the financial account. But yeah, you add all up that real estate inflows up, and it's about the equivalent of 700,000 single-family homes. And that's just kind of the accounting reality, which is that if we're running these ever larger trade deficits, more and more money must flow into things like real estate, mortgage-backed securities, REITs, U.S. equities, U.S. treasuries. This was great for the bond market, kept interest rates very low, of course, which is good for the government that wants to overspend. And it ties into the dollar and Triffin's dilemma. And the fact that that is how we get the dollar out to the rest of the world is that we must kind of, this is what Triffin said, you will have to run ever larger trade deficits because that's the mechanism by which you actually get the dollars to them. And you'll hollow out your industrial base and you'll hollow out your middle class until eventually you get to a point where you can't fulfill your domestic obligations and your international obligations. And that's kind of the point that we've gotten to.
And this was a long time coming, right? I mean, we went from being the world's largest creditor in the 60s to early 70s to the world's largest debtor in the history right now. But it took a long time to get there. And it seems as if now we all look back on the golden age of the 50s and the 60s and say it's a one-person household could go out and work for a whole entire family and they could have the home and the cars. But my question for you is, how realistic is it to use that as an example of what life should be, right? Because we think of that as an easy golden time, but it was also after World War II, where all the gold in the world went to America. All the developed world's manufacturing was decimated. Was it just a peculiar utopian time that can't really be repeated, or should that be the gold standard that we aim towards in the future?
Yeah, there's definitely a point to that argument. I've heard it kind of increasingly often over the recent, as these discussions are being had. And I'm sympathetic to it, that we shouldn't use it as the baseline, I guess, but I think we should use it as what we know is attainable. We know that America could attain what we had during that period of time, where there was good social cohesion, there was a high trust society, there was relative wealth where, again, a single income earner could support a very nice, very comfortable lifestyle that is like, even with a double income earner, even with two people making $100,000 per year in my area, you can't afford to buy like an 800 square foot house, so I think that we should always strive for better. Whether or not we ever get back to that, I don't think we do, unfortunately. But I think that like as a goal, we should always attain. We know that was attainable. We should always strive to attain what we know we were able to get. But with AI and robotics and the disinflationary, deflationary force that's going to put on our system, like given how highly levered it is, given what the dislocations we're already seeing with like unemployment rates with new college grads and youth unemployment and yeah, it's kind of bleak, unfortunately. I wish that there was some hope of things maybe getting back to that sort of America, but I think that it unfortunately kind of goes in the other direction.
All right, you said the magic word, AI. It's been the story of the year, of course, and you can't escape it now. Some people still think that it's just a bubble, something that's going to add zero productivity to the economy, and that we're just throwing money into the furnace with these data centers. Where are you on the AI debate? Are you using it? And how long until we've got robots doing our laundry?
Robots, probably a bit longer. AI, I think, is I kind of fall in the middle. I think that there is a huge amount of like misallocation of capital. I think that there's some degree of bubble-like circular financing, Ponzi, whatever you want to call it, right? There is, I think, objectively some legitimate cause for concern. But then on the other hand, I don't think it's nothing. Like I can really only gauge, like there's not a ton of like real hard data yet that I've been able to find, but I kind of have to fall back on like what I'm seeing for me, and being a nerd that is very interested in monetary policy and macroeconomics and international capital flows and all this kind of stuff. It's been pretty cool. Like it's been helpful. I started using it maybe like mid 2023 reluctantly. I would generally fall more on like the Luddite side than the techno accelerationist type side. And so I was reluctant to try it, but like as it's gotten better, I have found that it has increased my productivity. It's added to my ability to understand new concepts and explore even concepts that that I understand pretty well. And I think that like the key nuance with AI is that if I knew nothing about the things that I cover and I just started using AI, like, hey, teach me all the stuff that Infranomics talks about. Like, teach me just all of it. I want to know all of it. Help me learn. That person wouldn't know how many mistakes it makes. I know enough to know when it's hallucinating and know when it's completely wrong about something. It was just this morning. It was telling me that that a particular dynamic was going on in the Japanese yield curve, and it's like, no, I forget what it said, but it was not that. And so, yeah, I think that you have to have a base level of knowledge, like a fundamental kind of foundation, before it can start adding true productivity. But like, if you know enough to where you can use it to supplement your skills, your intellect, your experience, I think that's pretty useful. Is it really like super revolutionary and it's going to change the entire world today? Probably not. But if it really is reflexive and self learning, and that really does start to kind of accelerate, and we go nonlinear, I guess I could see that it does get to that kind of true revolutionary sort of state. But I know that it still makes a ton of mistakes in what I use it for. And we're nowhere near that yet. But, is it 10 years away or 2 years away? Like, I don't really know, because if it really is improving at a nonlinear rate, human mind is not good with nonlinear log scale. So, yeah, it could become quite revolutionary. I think robotics is probably further down the line. I personally wouldn't buy NVIDIA here or Microsoft or whatever, because just my line of thinking. Okay, so say it is total revolution in 10 years, we have 30% unemployment rate. Well, okay, there's UBI, but how are we going to fund the UBI? Well, it's going to be a tax on the very companies that are propping up the entire S&P 500. It's the only conclusion I come to. So, like, I personally really don't like buying S&P 500 or Qs or NVIDIA or Microsoft. None of that at these valuations really appeals to me. That's not where I would put my money. But I think I think like most things, it probably ends up falling somewhere in the middle between total scam, total bubble, and total revolution that's going to change the world, and there's nothing wrong with it.
You're not buying NVIDIA, but are you buying Bitcoin?
Yeah, I bought more. I kind of stepped away in April, May. Like, I don't know. There were kind of issues that I saw developing, that I kind of felt like it just didn't make sense. And it made more sense for me to also, on a personal level, to pay down as much. I basically paid down all my debt, eliminated, like, I have no debt. So I was very aggressive with that, and kind of really, instead of saving money, I was paying down 30% credit card, 30% interest on credit card. That is Bitcoin going to return 30%, over the next year? And so I was kind of making some logical, financial decisions like that to pay down a bunch of debt and be really aggressive with that. And I'm glad, because, it turned out that there were some liquidity strains. I think that was really what started to cause the sell-off. If you look at the top in Bitcoin, and when bank reserves started to really kind of decline, it was like a week prior. Bitcoin led the bank reserve decline by like a week, and the TGA build up. You also had like the SMH start to underperform, or IWM equal weight S&P start to outperform the semiconductor index kind of around that same time too. And if you look like when NVIDIA and some of those names, so it kind of lined up with a bit of the kind of AI froth starting to come out, but I think it was also a liquidity story as well. And so now I'm in a spot now with Bitcoin in the 80s where it's like, oh, okay, so I paid off all my debt. I've removed this huge burden that was, sucking up a huge amount of my income. I've removed that. And now I have not only a removal of all this debt, but then I have now this other income source. And, I'm able to buy 30% cheaper So yeah, no, I've definitely 82. I think it was like 82.8 that one weekend, or maybe it was a Monday, where it had that kind of like waterfall price action. I was able to catch that. Was pretty happy with that. Bought a good bit there, and then 2 days ago, I think 2 or 3, yeah, like a couple days ago, I bought more at 88 ish, and yeah, I think I'm pretty bullish Bitcoin. Like I didn't step away from buying Bitcoin out of bearishness per se. I just felt like there were enough risks developing kind of macroeconomic wise. But then there were also kind of like these personal things where I just wanted to get rid of debt. And I wanted the emotional return of being debt free. And so, yeah, I just kind of shifted my focus from accumulating Bitcoin and assets into paying down debt and kind of stacking, a big buffer of liquidity. Because yeah, there's also been all these pivots in my life with like all this stuff, so it feels good to have a pretty good buffer. It gives you flexibility. I understand sitting in the dollar is not like the most advisable thing, but for me at least, it felt like the right move and ended up being the right move because now I get to buy 30% more with the same dollars. So yeah, I think anything really kind of like 85, 90, certainly below. If it goes below here where we're at now, if it breaks that 82 or wherever, if it breaks that low, like I will be buying aggressively. Yeah, because I'm very bullish. I think 2026 is going to be pretty good for Bitcoin for in general for most assets, most likely. I don't fall into like the recession camp, and I think that if anything, we're kind of coming out of a recession. That's what the rate of change of all these different charts. I did a whole video on it, 13 charts that show we came out of a recession, not that we're going into one. There is a possibility where we kind of have like a rolling recession, certainly with some sectors and certain cohorts are still in recession. But in the aggregate, I think that, probably S&P 500 probably does pretty well 2026. I think Bitcoin continues to do well. I think gold continues to do well. I think that, commodities like the Goldman Sachs commodity index, like a broad commodity index, I think I'm starting to get more and more bullish on like oil and commodities and this reflation sort of regime. And we're going to get a weaker dollar. We're going to get more Fed cuts. We already have the liquidity injection with the RMPs. I think that'll eventually turn into QE and buying of the long end. So I think that like from the monetary side, we're moving much more towards fiscal dominance, very inflationary, very stimulatory. Yeah, so I think the administration wants to run it hot. They've said they want to run it hot. They've been saying that going back to June or May or something. Like people are just, Bloomberg, CNBC. It's like they're just now talking about it. It's like, guys, like they were telling you back in May and June. Elon Musk, David Sachs, all of them. So yeah, I think it's a pretty kind of run it hot sort of environment and high nominal growth, high inflation. I mean, we already have 3% inflation, and the Fed's been cutting rates with assets at all-time highs. So, yeah, I think it's kind of much more that, which should be good for Bitcoin. Like, I think the October 10th, whatever you want to call it, dislocation. I think that really kind of threw like an extra wrench. I think Bitcoin was already kind of starting to top and maybe have a little bit of weakness. But I think that it got way more weakness due to some pretty serious kind of market dislocations with that period of time, that event. And so, yeah, I think I'm more than happy to buy in 80s or 70s, certainly the 60s or the 50s.
Yeah, I'm certainly bullish going into 2026 because you're right. They got to run it hot. We got the midterms coming up. It's a matter of Trump maintaining his legacy. If they lose the House and the Senate, then good luck him getting anything done. Just going to face just roadblock after roadblock. So they got to run it hot. It seems as if they've been holding that card in their back pocket. They knew since Doge failed that there's no way they can cut their way out of this. They've got to gas up the economy. But it seems as if they've kept the brakes on, like these tariffs it's the largest tax hike in the history of America, if you want to look at it that way, right? And so it seems as if they're trying to time it perfectly so that it hits people's pocketbooks right in time as they're about to go to the polls next November. Do you agree with that thesis?
I think that might be what they're trying to do. I don't think it'll work. Yeah, I mean, tariffs right now are bringing in about $350 billion per year, ballpark. That is a huge tax. Tariffs are most certainly a tax. And this is why from the very beginning, from before Trump was even elected, I said tariffs were not inflationary, was because they're a tax fundamentally. And taxes by definition are the opposite of inflationary. So yeah, like I think that what they promised was that the External Revenue Service, Howard Lutnick went on Anthony Pompliano's show and promised multiple cabinet officials made this promise that we're going to do this External Revenue Service, we're going to do the tariffs, we're going to collect all this revenue, and we're going to eliminate the income tax. I think if they followed through on their promise, which I don't think they're going to, if they did and they eliminated the income tax, that could be pretty massive. I think that could be like one of the single biggest policy wins, I think, in my lifetime, if they were able to eliminate the income tax. But that would mean that they're following their promise. I don't think that they are going to. I mean, they've broken so many others that, yeah, I think they'll try these little things around the margin. Oh, here, have 50-year mortgage and pay the bank even more in interest, or here's a $1,500 stimmy check. They'll try. I think that there will be those sorts of efforts, I guess, but I don't think that it's going to be enough to really get people. I mean, again, that step change, like people are just so, especially younger people, which are really eroding in terms of support for this administration. Like they're really losing young people. Yeah, I don't think it'll be enough.
And we'll get back to the young people, but I want to ask you before we move on, the divergence between gold and silver and Bitcoin this year, especially Q4. How do you explain it?
Yeah, so silver definitely is kind of somewhat easy. I mean, especially if you fall into kind of the reflation camp, early business cycle sort of view. Silver makes sense because half of it is industrial demand. Gold is not that way. Gold is being driven higher due to the central bank buying and kind of this de-dollarization concerns. I mean, I go through every month's tick data. And central banks have been deleveraging from their treasury holdings. It's just a fact. Arguably going back to 2012 is really when this started. If you look at foreign held debt as a share of total government debt, it peaked out at 35% back in 2012. And it's down at like 24, 25. It's been declining for, 13 years. So you look at dollar share of FX reserves, that's been declining for 10, 15, 20-ish years. A while, right? Not just like the past year or two. So some of these trends kind of like for gold already started. I think that they just accelerated in 2022 with the seizure of the FX reserves with what we did there. I think that kind of like turbocharged it. And then of course, Trump coming in, being much more mercantilist. I think that just added fuel on the fire. Why Bitcoin is not following it? I don't know. I mean, the answer is clear, which is Bitcoin is trading like a tech stock, like a high beta tech stock. Like objectively, I know the answer, but like it still doesn't really make sense to me why the market hasn't woken up to the fact that Bitcoin is much more akin to digital gold. I mean, as a quick and dirty way of describing it or conceptualizing it, I think that is much more accurate than, oh yeah, Bitcoin is, 2 beta Qs like that, to me, that doesn't make sense. I think eventually the market will wake up to the fact that it's not NQ, that it is much more akin to digital gold. That's my bet, at least, I'm hoping that I'm right. It could take a couple of years. It could take a decade, but I'm willing to, for me, like anything that I put in Bitcoin is like, I see as like at least 5, 10, 15 years out. So my time horizon is very long.
And with the world dumping treasuries, FX reserves and dollars going down, gold going up, especially among the BRICS, do you think there's a bifurcation happening? Are we splitting the world in two? Were the tariffs supposed to do that? Or is it all just a show trying to make Trump look like a tough guy?
I think that they are. I think Trump especially is serious about trying to address the current account deficit. I don't think he really understands. I don't think he really gets it, because he'll make comments about the dollar's reserve status that are totally antithetical to what he's saying with the trade deficit. So, like, I don't think he gets it. And I get it. It's kind of complicated stuff. It took me a while to really understand it. I think he does truly believe that running a trade deficit is not ideal or wrong, whatever word you want to use to describe it. Because you can find comments from Trump going back to like the late 80s, I want to say, early 90s, where he was railing against the trade deficit and talking, proponent of tariffs. So I think he genuinely does. And you look at like Stephen Myron, he wrote an entire paper on how to kind of extricate ourselves from Triffin's dilemma and reorder kind of global trade and monetary dynamics. So I think he cares. I think Besant too as well. Besant back in July of 2024 at the Manhattan Institute, I think it was, said like 3 times that there's going to be a global monetary reordering in the next couple years, I think he said. And not only that, but that he wanted to be a part of it. So I think he genuinely kind of wants to really reshape things. Trump, I don't know. It's so hard. Like, I think the key with Trump is to take him more seriously, but less literally. I think that's probably the best way of going about trying to interpret that. The tariffs alone are not going to balance trade. Like, they're not nearly enough. When you look at the degree of dollar overvaluation, a 20% tariff is not going to balance trade. It takes a devaluation of the currency, like a significant devaluation. So will it be enough to really, like, by the end of Trump's term, will the current account be, meaningfully reduced, the deficit? If they're willing to do a Mar-a-Lago Accord, yes. But if they're not, then no. And I think that's ultimately kind of the next big question is Stephen Myron and Besant, I think, really would want to go down in history, because you only get one of these every couple decades, every like 4 or 5 decades, So I think Besant would really like to be Treasury Secretary for a Plaza Accord 2.0, Mar-a-Lago Accord, whatever it is. I think Besant would really like that. Myron wrote a whole guidebook on how to do it. And I think Trump, wants to go down in history as like a powerful guy or influential. And, I could see that being kind of the next big question. The problem with it is it's going to mean a much weaker dollar relative to like gold, a much weaker dollar relative to goods and services, a much weaker dollar relative to other currencies. All of this is inflationary because we still run a huge trade deficit. So that's kind of the next question.
And the brains behind this operation certainly seems to be Besant. And there was a fight between him and Elon earlier in the year and actually got physical. But it's been 1 year. What grade would you give Besant as Treasury Secretary and his job of redefining the global economic order?
If it was April 4th, I would give him an A minus, B plus, A minus. But then it all went downhill. Besant was saying all the right stuff. And I think he genuinely believed most of it. But yeah, unfortunately, we just kind of went back to more of the same, and especially the messaging. Like, the messaging has been just awful. Pretty much in every regard, the messaging has been just horrible. As to what their agenda is, what they're trying for, what their objectives are, how they're going to get there, the trade-offs, right? All that stuff is just, the messaging is awful. So yeah, unfortunately, probably from A minus, B plus to C minus, D plus. Unfortunately, we just got more Joe Biden 2.0. The stock market's up. What do you have to complain about? Main Street won for 4 days, and then we're back to more of the same.
I saw a clip yesterday of Besant, and he's talking to a bunch of factory workers, and he goes, "Our bonds have done the best since 2020 under President Trump, and as your nation's #1 bond salesman, I'm going to tell you we're going to do even better next year." And there's dead silence, and somebody in the back goes, yeah, and then everybody claps together because they're supposed to, but
That's
it
crazy.
did not hit. That's not
Yeah.
what the people in middle America want to hear. That
They don't care about the
bond
U.S.
schedule was
the
doing well.
10-year U.S. Treasury yield. Like they don't. Yeah. Like if anything, we should be selling less U.S. Treasuries. If anything, we should be running smaller fiscal deficits. We should be, trying to reduce its current account deficit. But again, that removes the buyer of like you can't balance trade and still be the reserve currency issuer, right? And this is like one of the fundamental divergences, I guess, with Trump is that like he doesn't get that. And so yeah, like I think Besant unfortunately has all the right things, the capabilities, right? Like I think he's got it in there, but he's got to follow his boss, and like especially this boss. Like other presidents, you can kind of go against him, not this president. So he's kind of boxed into a corner. I think if he were allowed to just have free reign and do what he wanted to do, I think things could be much better. I think he's got the right intellect. He's got the right experience coming from the background that he does. But yeah, unfortunately, there's a bit of kind of, he's kind of boxed in from his boss, unfortunately.
I mean, they've got powerful friends and backers that don't want to see the S&P go down, right? Yeah. And so the second it does, you got to pull back on whatever they're doing. One thing that's very impressive about you is that you're essentially self-taught, right? That you were able to go in there online and teach yourself all the plumbing of the global economy. In teaching yourself this, what was the biggest lie that you had to unlearn from your previous education?
Oh, wow. I didn't really have any lies. Like the crazy thing, and this explains, I think, a lot. The crazy thing is I, was a very high achieving student. Like I was basically that like AP nerd that got 4s and sometimes 5s on his AP exams. And like, I was like top half of 1% of my class in high school and stuff. I was that kid, I was that nerd. And I didn't really get any economic understanding like at all. And so, yeah, like I luckily for me, like I kind of had a blank slate. So like I didn't have to unlearn. I mean, I think I took like maybe like half of a year worth of economics, maybe, but I don't really remember like any economics formal, in high school or certainly college. I didn't study it. So yeah, it was kind of good because it was just pure curiosity and pure kind of, once I get interested in something, like my brain just gets like laser focused on it. And I'm a very curious person. So having a blank slate, not having to really unlearn a particular orthodoxy and not having a kind of being boxed in that way was really cool. And I told myself, like in the very beginning, I told myself, I could tell right away there was many different kind of camps. There were many different schools of thought, right? There's the Austrian school versus, and I told myself, like, try to consume it all. Just try to consume it all. Try to have as open mind as possible. And so I think that really helped to be curious. Number one, like intensely curious. Number two, kind of obsessive, like extremely obsessive. I was very obsessive. But that's just how I am. And number three, to be kind of like militantly open-minded. I think that really like gave me kind of a good roadmap for how to like end up teaching myself as much as I did. You learn, like, it's only once you get far enough along the road that you really know enough to, criticize or dismantle a particular orthodoxy or, theory or something. So yeah, like I would say that I get that question a lot of like, how from people wanting to learn. And it's like, the three things I kind of always say is just be as open-minded as possible, be intensely curious. Like every day, I still, to this day, wake up and try to learn something every day. Number one, and yeah, just be very open-minded and curious. And if you have that obsessive quality to you, like, and it can be productive if you get it laser focused, like that's what I did. I mean, I took it pretty crazy. I would like listen to Bloomberg TV all night long on like low volume when I slept. hoping that stuff like, like classical music for a baby or something. Yeah, so I was very obsessive with it. I was very interested in it. It was coming at a period of time back then where there was so much dislocation in my personal kind of finances and the broader world during 2020. It really started in kind of 2020, 2021. During that period of time, like that helped kind of be a catalyst, right? Like a reason to get me interested in it, I guess. But yeah, just be intensely curious and being, very, very open-minded, like militantly so. That was really helpful. I would say that, if you have a formal economics background, it's probably harder to end up at a spot, right? Like, I'm glad I didn't have to unlearn any of that because, yeah, man, I can't imagine what like 4 years of Keynesian formal education. I can't imagine trying to unlearn that. I think that'd be too hard.
Absolutely. And I think that's why you've grown so quickly in this last year, is the fact that you didn't go too firmly into one camp at the beginning and say, hey, I'm this is what's real and everything else is a lie. And that's why you can speak to people on the left, right? And the right and the Bitcoiners and the TradFi guys. They respect what you have to say because you come in from this unique perspective. And I think you've been able to grow so quickly because of it.
Yeah, I just try to, for me, like I just try to be authentic. And like if I've looked at the data and I've looked at thousands of charts and it shows XYZ, I'm going to say XYZ. Like it might make some people upset, but like if that, one thing I would say is, to answer that question, it wasn't really like an economic orthodoxy, but more political one, which is that free markets or the US version of free market capitalism was like the best economic system ever. I was very like libertarian from like 2016 to kind of 2019, 2020, 2021. It's very like kind of libertarian, I guess you could say, if you had to put me in a camp. And so I was very much in that kind of libertarian economic sort of, I had consumed some of that stuff. And yeah, I realized very quickly looking at the data that was not accurate. And like, in fact, the if you look at the periods of time that had the best, the most kind of ascendant growth, Japan, China, and even the US earlier in the century, it all came at a period of time where there was not really free markets. Like it was pretty heavy intervention. And it's not to say that government intervention is like without its flaws. It doesn't open up a huge Pandora's box, because it absolutely does. But like Japan, when they merged fiscal, monetary, and trade and industrial policy coming out of World War II during that kind of period of time up until we went over and blew it up, they were ascendant. They were Japan Incorporated. They were going to overtake the USA with like this tiny island country with, one fraction of the population. They were extremely strong during that period of time. China, same thing, kind of the state capitalism sort of model, did extremely well. I mean, they became the world's factory in like 2 decades. I mean, they're running like a 6% of GDP current account surplus. It's crazy. And gained, a tremendous amount of geopolitical power just in a pretty short amount of time. To say nothing of the wealth that they, as a country at least, have gained. And the US, right? Like during that period of time where we were kind of ascendant, coming out of like World War I and then kind of like into World War II and coming out of that, there was, much higher marginal tax rates. There was no Fed Treasury, and there was no Fed independence until the Fed Treasury Accord of 51. So yeah, like I learned that like, there is no like golden rule, like you listen to some of those kind of like libertarian economist types and it's like it's just not backed up by the data, that it's just not like, it's not to say that like as an ideal, we can't strive for more free markets and more human freedom and more individual choice and all that stuff. Like I agree with that generally. But to just kind of make these like, dogmatic sort of statements that it's the only system that works, like is just not factual.
Well, there you have it, ladies and gentlemen. Stay curious, keep an open mind, and who knows what you may find. Robert, it's been an awesome hour with you. I really appreciate your time. If people want to find out more about you and your work, where should they go?
on YouTube, Infranomics, INFRA, nomics like economics. And then on Twitter X, Infra, INFRAA _. And I have the blue check mark. I got imposters. So make sure it's got the blue check mark. I also have an Instagram now. So Infranomics on Instagram with the _ at the end. You can find me there as well.
Wonderful. All right, man. I really look forward to seeing what you do and come up with in 2026. I think you might just have your Mike Green moment yourself. So
yeah,
I'll
thanks
be on
for
the
having
lookout.
me. I appreciate it.
Cheers. Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 cents in the chat. See you next week.